According to two experts in a significant financial institution, Bitcoin is now undervalued at $20,000 and should be priced higher. The coin was recently valued by JPMorgan Chase at $38,000, around 90% more than it is currently worth. Hey people, welcome back to our channel. In today's video, we'll be looking into everything you need to know about buying crypto now. But before we start, make sure to subscribe to our channel and turn on the notifications, and most importantly, watch the video till the end. Let's get started. Juriam Timmer, Director of Global Macro at Fidelity Investments, estimates that the fair market value of Bitcoin is currently between $40,000 and $50,000, and that it might be valued up to $100,000 in 2 years. According to Chris Brendler, Managing Director and Senior Market Analyst at D.A. Davidson, Bitcoin will rise back to around $38,000, and by the end of 2023, it will reach $50,000. Bitcoin is a special species because it is challenging to determine its exact value, according to Brendler. When people just buy with the intention of seeing their investment increase in value, it frequently experiences these inflated upward movements. They leave once the sun begins to set. But over the next few years, Bitcoin will become more expensive than it is right now. What does this signify for cryptocurrency enthusiasts who may be considering investing in Bitcoin? Is it a good idea to invest now when the crypto market is on sale? Some financial experts believe that investing in cryptocurrencies may be worth the short-term risks if you can clearly define your long-term objectives, and don't let it prevent you from meeting your other financial obligations. Before making an investment in Bitcoin and other cryptocurrencies during the current downturn, keep in mind the following. Prices of Bitcoin, Ethereum, and other cryptocurrencies have fallen recently, along with the stock market, as investors struggle with concerns about a recession, rising interest rates, escalating inflation, and Russia's conflict with Ukraine. After reaching an all-time high of $69,000 in November 2021, the price of Bitcoin fell to around $19,000 on Thursday, a decline of about 70%. Ethereum, on the other hand, dropped to around $1,000 on Thursday for the second time in June as the network gets ready for a significant and long-anticipated upgrade. In June, the price of Bitcoin fell by close to 40%, tumbling to under $18,000. In June, the price of Ethereum plunged by almost 50%, reaching a low of roughly $900 at one time. However, some industry insiders believe that Bitcoin and Ethereum values could fall considerably further. A crypto winter is a protracted period of falling and stable pricing, like the one that occurred between the beginning of 2018 and the middle of 2020, according to venture capitalist and founder of Delta blockchain fund, Kavita Gupta. According to Gupta's technical analysis of the market, in the upcoming weeks or months, Bitcoin might collapse to $14,000 and Ethereum could drop to $500. But only after you've evaluated your risk tolerance and given priority to other areas of your money, such as saving for an emergency fund, paying off high-interest debt, and investing in a traditional retirement plan like a 401k, according to experts. If there is one thing you should be aware of before investing in cryptocurrencies, it is that they are extremely unpredictable and volatile. Values change minute by minute as a result of hype, speculative movements, and general economic conditions. Potential investors should understand that price swings are normal and should expect prices to decline further before making a purchase while the market is weak. Put only what you're willing to lose into your total crypto investment strategy. Experts often advise investing no more than 5% of your money in cryptocurrencies. According to experts and Advisor's Investability Score, Bitcoin and Ethereum are the two cryptocurrencies that are the greatest places for beginning investors to start. The cryptocurrency industry has attained a $1 trillion market capitalization for the first time in 5 weeks. However, this recovery is not as strong as the market's $3 trillion peak from last November. Is it still worthwhile to invest in cryptocurrencies in a market with high inflation and impending economic risks? Cryptocurrency fell to pessimistic lows this year after reaching bullish highs in 2021, entering a bear market that some are referring to as another crypto winter. The $2 trillion cryptocurrency market crisis destroyed once dominant digital currencies like the crypto token Luna, which lost all of its value after stablecoin Terra USD's collapse in May. Erased investor profits cost thousands of people their jobs and destroyed investor gains. Although the price of Bitcoin is beginning to rise, the market has always had erratic highs and lows, and naysayers have long viewed Bitcoin as a doomed bubble that will eventually explode. Bitcoin, stablecoins, and NFTs have all been criticized for being nothing more than the modern digital iteration of an old-age hoax. Investors, meanwhile, view the realm of digital currency as a development, a sort of money 2.0 that will democratize finance and fuel the metaverse. One thing hasn't altered despite the swinging prices and shaky sentiments. Cryptocurrency is still divisive, dangerous, and extremely volatile. Simply put, a cryptocurrency is a digital token whose ownership is documented on a distributed, untrusted ledger called a blockchain. Theoretically, this is made to make it more secure. The two most well-known cryptocurrencies are Bitcoin and Ethereum, but there are more than 18,000 tokens that are traded under various names. Cryptocurrency is viewed by many as the next financial frontier despite its erratic values and minimal regulation. The urge from influential government and corporate institutions to quickly legitimate cryptocurrency in a manner similar to stocks and bonds is growing, as seen by developments like President Joe Biden's intention to investigate a digital US dollar and multi-million-dollar Super Bowl advertisements. But it's important to think about if investing in cryptocurrencies is a good idea for you, especially given the current bear market and the constant threat of a catastrophic fall. According to Jerry Walsh, Senior Vice President of Investor Education at the Financial Industry Regulatory Authority, cryptocurrencies is one of those categories of investing that doesn't have those usual investor safeguards. They fall outside the purview of dealing in securities. In terms of rules, it is a changing area. Professionals advise against investing more money than investors can afford to lose in cryptocurrency, since it has a checkered history, many dangers, and few safeguards. Here are 5 important issues to think about before you start investing in cryptocurrencies if you are considering doing so. You should be aware that there is hardly any protection for cryptocurrency investors before making any investment. And that's an issue given how hyped up and volatile this virtual currency is. It's simple to get sucked into tweets, TikToks, and YouTube videos praising the newest currency, but the exhilaration of the market surge can easily be undone by a shocking drop. Be on the lookout for cryptocurrency frauds. Pump and dump is a common fraud in which con artists convince victims to purchase a certain token, which raises the token's value. When that happens, the con artists sell out, frequently driving down the prices for everyone else. These widespread frauds generated more than $2.8 billion in cryptocurrency in 2021. You are on your own in terms of current US governmental policy. As with bank accounts, the government does not currently offer deposit protection for cryptocurrency. Following Biden's executive order from March, which instructed government organizations to look at the risks and potential advantages of digital assets this could alter. As far as we know, Breach Insurance is the only firm that provides crypto insurance, and its Crypto Shield product guarantees to protect your accounts from hacks. Other businesses like CoinCover offer theft protection, which notifies you if your account experiences questionable activity. Depending on the level of security that your wallet provides, CoinCover maintains an insurance-backed assurances that if its technology fails, it will reimburse you up to the amount you're entitled for. Cesar Francesi, the director of the University of Texas at Austin's blockchain initiative, believes that cryptocurrencies still have a bright future despite all the hype, frauds, and periodic falls in the market. Cryptocurrency, according to Francesi, offers a viable solution to some of the difficulties of the traditional banking system. The old financial system that is currently in place is not inclusive. It is expensive and slow. Cryptocurrency, in my opinion, provides a means of truly subverting the system. We must reiterate that all cryptocurrencies are subject to market volatility, that every investment must be followed through on, and that you should conduct thorough research before making any investments before moving further. The video has come to an end with that. Let us know your ideas in the comment section below to help us expand our community and attract more people who share our interests and are eager to learn. Please hit the like button and subscribe if you thought the video was interesting. Till then, bye.